standalone numbers, seen an improvement on a year-on-year basis, at least for the profitability. So 7.3 crores compares with 5.3 crores, but we're awaiting the consolidated numbers. So that's the one we need to focus on. The stock in the meanwhile is rising. It's now up close to about 1.5%. Hi.
Hi, Rima, and we also, as we speak, we also have the standalone, consolidated numbers for NIIT, and we've seen a doubling of profits. In fact, year on year, the net profit has come in at 20.8% versus 10.3%, so that's a 102% rise on the net profit. At the same time, the EBITDA has also surged by about 40%, came in at 25.2 crores versus 18.1 crore. The margins have seen an expansion of close to 230 basis points, and the net revenue has grown at 5%. Remember, for companies like this, which operate on a huge operating leverage, a top line growth of 5% implies a much higher EBITDA growth and an even higher bottom line growth. And the stock, as we see, or as we can see, has moved from the low point of the day up about 1.1%. And that stock has been an outperformer as well, up about 150 points, or rather 150% since July itself. And that's the management. We'll wait for them to start with their press release, but as of now, here's a roundup of all the top stories that we're tracking. Weak trade on Dalal Street. The Nifty gives up its early morning gains, slips below that 8250 level. The mid-caps fall in line with the frontline indices, and the Bank Nifty is underperforming as well. But the NIIT press conference has started. Let's cut across to the management.
The people who are accompanying me today, Rahul Patwardhan, he's the Chief Executive Officer, P. Rajendran, the Joint Managing Director, and Rohit Gupta, who's the Chief Financial Officer. And I will now request Rahul to take us through the highlights of Q2, and then after that we can have Q&A.
Thank you, Vijay. Q2 was our second quarter after the restructuring that we did in Q4 and the plans that we laid out for the transformation of NIIT. And I'm happy to say that we are well on course. All the plans that we had planned for the Q2 have happened on schedule, and that is translated into the numbers that we have just released. We have grown 5% year on year on revenue. We have a 13% growth on our businesses which are going forward. This excludes the businesses that we have officially indicated that we will be exiting over the period. Our EBITDA is now up to 9%. Which is an improvement of 230 basis points vis-a-vis the same quarter last year. Our PAT has grown by 102% to 208 million for the quarter. Our overseas revenue is now at 63% of our total turnover. It was 59% last year, same quarter. Our DSO days are now down to 86 days as against 93 days at the end of Q1. Our net debt is also down to 965 million as against 1053 million at the end of Q1. And our operating ROC has also improved to 10.1% as against 4.5% for Q1. All this is on the back of a very strong continued performance by the corporate learning business, which grew 16% YOY on revenue, rock steady in its consistency. And 12% EBITDA again, as indicated, as we have planned for the year, has been well on course. The MTS revenue has grown to 91% as against 89% at the end of Q1. And we've added one MTS customer, Citibank, which we had announced a couple of days ago. Our order intake has also grown by 15% in line with the revenue growth. In addition to that, the SCG, or the Skills and Career business, the transformation impact is starting to see come through. We had promised to be back to growth, back to profit in this business by the end of the year. And I'm happy to say that both on revenue and on profit, we're already back in the black, which has been good progress ahead of schedule on this business. So we've seen 1% revenue growth on SNC globally. And we have a successful turnaround on the international business, both on revenue and on profit and on cash. And our EBITDA for the SNC business is now 7% as against 0% in Q1 and 3% for the same quarter last year. Most important, the 1% revenue growth is the first quarter of revenue growth for this business in the last 37 quarters. So we have turned around the ship. We've also seen 9% YOY growth in our channel business, which indicates a healthy sign because a large part of our business in our 300+ centers around the country are growing now. and our beyond IT share of revenue has now grown to 40% as against 39% at the end of quarter 1. We also initiated the renewal phase of transformation of the skills and career business with the launch of StackRoute in August, heavily oversubscribed in our first batch, and we've launched our first batch in October. In addition, we launched NIIT TV, a path-breaking, disruptive introduction by NIIT into the education landscape. And we can already say that we have a very large number of registrants from 82 countries around the world on this portal in the last 15 days alone. So I'm very pleased with.
Okay, that's NIIT Limited. Fairly decent set of earnings, revenue growth of 5%, profits, margins have gone up, the profits have doubled, and the company's embarked on a transition part, restructuring, and the results of that have been seen in the last 2 quarters. That's ever since the new CEO, Mr. Rahul Patwardhan, took over. But the stock has already priced in perhaps most of the good news, because in this year itself, in 2015, it's doubled, and in the last 1 year, it's seen a rally of 250%. So that could be one of the reasons why the stock is not reacting too much. But let's address the markets. Pritesh Mehta, the